And this is always a hard one, particularly for us in the room, but it is helpful if you identify yourself and your organization before you speak each time, particularly because when you go back and do minutes, it's hard to tell speakers apart. If you're on the phone and logged in via web, please turn off your computer speakers. That goes for PID staff as well. And just reminder that the chat and polling are generally reserved for board members. So with that, we'll go ahead, call it to order, and I will call the roll. Representative Zimmerman.
Here.
Senator Santicero.
Designated.
Is represented by Corey Smith until the senator is able to make him. Representative Warren.
I'm here.
Senator Baker.
Senator Baker is represented by Mark Gerhusky and Chris Ramsey.
Very good. Thank you very much. Director Padfield is represented
Tom Hughes.
by Tom Hughes until and unless he can join. And Deputy Secretary Cameron.
Here.
Very good. We have a quorum with all members represented. I think late last week or early this week, you were all sent a copy of our meeting minutes. We will need to move through approval of the minutes. They have been distributed again. If there are any changes, you can let me know that now. If not, I think we can entertain a motion to approve the minutes.
I'll move to approve the minutes.
Deputy Secretary moves. Do we have a second?
I'll second.
Seconded by Representative. Okay, very good. All in favor say aye. Any opposed? Same sign. Hearing none. Motion carries. Minutes are unanimously adopted. So at this time, we will provide an opportunity for public comment. Please note that public participation is permitted as required by the Sunshine Act. But to ensure the orderly progress of today's meeting, we ask that all comments be directed to the chair and should be limited to no more than 5 minutes. Questions asked of the chair or the board as part of the public comment period may or may not be addressed at this meeting. So with that, I will open it up to any public comment. Moving right along. Very nice. So we will first move, I think, to a presentation by Penn State University. As you remember from our first meeting, they had previewed their initial reporting on flood insurance, and we wanted to bring them back to talk specifically about their conversations and review of the various interested parties that are affiliated with a real estate or an insurance transaction as part of this meeting. So if you could introduce yourselves, that would be great, and we'll get started.
Sure, great. So thank you so much for inviting us back to dig a little deeper into our findings in our study, Partnering for Protection. My name is Nicole Sturgis. I am Assistant Director of the Center for Survey Research at Penn State Harrisburg. We are part of the Institute of State and Regional Affairs, which is an applied research center at Penn State Harrisburg. For this project, I served as the project manager and lead qualitative researcher. And conducted interviews for the project as well as did the data analysis. So I'll let my colleague introduce herself.
Hi, I'm Christina Diefendorfer. I'm a research analyst at the Center for Survey Research, and I supported the qualitative efforts really heavily and also assisted in the analysis and writing of the final report.
I also want to point out that Christina also served as an assist to us for content expertise, as she has a master's in emergency management from Millersville, so she helped us with our literature review and background information as part of this study. So today's presentation is going to focus on key findings of the study as well as some of the specific findings by role. Next slide. So I just wanted to recap, as we shared with you last month, the study utilized a mixed methods approach. This included 2 data collection efforts. The first was a web survey of Pennsylvania adults that explored flood risk awareness, knowledge of flood insurance, and interactions with professionals. Then what we're really going to be talking about and focusing on today are the interviews. So we conducted 30 interviews with professionals from the field of real estate, insurance, and banking and lending, 10 individuals from each of those roles. And in these interviews, which lasted about an hour, we explored communication and interaction with clients, knowledge of flood insurance, and the flood insurance purchasing habits of clients. I just want to note as well that recruiting for the interviews was done in collaboration with several large professional groups here in the Commonwealth, including the Pennsylvania Association of Realtors, the Insurance Federation of Pennsylvania, Insurance Agents and Brokers, and the Pennsylvania Bankers Association. So all of those groups assisted us with recruiting. We conducted these in November 22 through February of 2023. And again, exploring flood insurance purchasing habits and communication efforts from the view of professionals. So I want to just review several of the key findings from our study. Overall, the key findings focused on the topics that were included in our research objectives. So the research objectives for this study included flood insurance coverage and purchasing interactions, client understanding or consumer understanding of flood risk and flood insurance coverage, factors associated with decisions to purchase flood insurance, the knowledge base of professionals, and interactions between professionals and clients. And I want to just point out, if you have not had a chance to look at the report, the word clients is used in a variety of ways. So it's used as, an interaction between, potentially a home buyer and, a professional, a consumer, an individual who would be exploring purchasing flood insurance. So I just want to make sure that I get that clear. So first key finding is that there was significant confusion on insurance coverage, types, and associated costs by consumers or clients. This often led to an underestimation of flood risk and impacted the decisions to purchase flood insurance. There was confusion about what's actually covered under homeowners insurance regarding flooding events, and even further with renters believing that their landlord's insurance would cover them if a flooding event occurred. So for individuals who do not use realtors, there is a potential gap in their knowledge regarding flood insurance and risk. Renters may assume that their landlord's insurance policy is covering their damages resulting from any flooding. Secondly, regardless of the profession, all the professionals that we spoke with relied on FEMA's website and other FEMA literature materials and courses for information on flood insurance. They also identified internal resources as important sources of information. So these included interactions with trusted and experienced colleagues, compliance departments within their institutions, underwriters, company help desks, and private insurance companies. It is important to note that none of the professional groups that we spoke with had a specific requirement for flood insurance training as part of their continuing education. It might have been offered, but it was not required. Cost was a major concern for both real estate professionals and consumers, and it was a significant deterrent to the purchase of flood insurance. So one of the interviewees that we spoke with was quoted saying, there are people saying, this property's in the floodplain. Yep, I'm not paying flood insurance. I don't even want to talk about this property anymore. Realtors also noted a stigma that was associated with flood zone properties. This led many properties to linger on the market for longer periods of time, and it also caused some realtors to downplay the risks of purchasing these properties. So one quote that we had heard was, houses in the flood zone, there's a stigma. They're going to be on the market longer. Your sign is going to sit out front longer. It's going to become day-old bread. Next slide. There was also an inconsistency in initiating conversations on flood insurance and flood risk. However, professionals who cited personal experience with flooding were more likely to start these discussions with their clients. So we interviewed several professionals that did discuss their own personal experiences. And one said, I've seen the devastation of flooding. I've lived it. I saw what it does firsthand. And I think we really need to make the public aware, and we really need to try to encourage people to carry flood insurance if it's not required, at least on a voluntary basis, to protect their assets. We also noted that some realtors inconsistently discussed flood insurance and risk. One quote that we heard was, flood insurance is kind of like seasoning if you're making a steak. It's not the main course. It's something that has to do with buying the house, but not the primary factor. Unless you pull up to the house, you see the stream next door, then it's more of an issue. Insurance professionals across the board were viewed as the experts in the field and had a greater level of knowledge about flood insurance. However, much of the information surrounding insurance, including terminology, was confusing and very complex for their clients. Also, last month, if you recall, we discussed the stay in your lane approach that we found during our interviews. This was used by many lenders and realtors that instead of risking sharing inaccurate information, they would prefer to refer their clients to insurance professionals for information, questions, and specific details on flood insurance type, coverage, and costs. Lenders also were in the same boat. They were more focused on regulation and whether or not there was a requirement for flood insurance to be carried with the purchase of the home. Next slide. So I want to, for these next two slides, you're going to notice some role-specific findings. So what we did is we broke out each of the professionals and groups that we spoke with, and we kind of gave a key finding by the role, and then we highlighted a consideration or recommendation that was included in our report. So for real estate professionals, they're an integral part of creating awareness for buyers and sellers with regard to property flood risk. Often, they're the first, person that someone who is wanting to purchase a home or look at a piece of property is interacting with, and they're going to be asking questions and look to them for answers or to refer them for more information. Ensuring transparency and making sure that professionals are knowledgeable about digital tools. For example, the Penn State Flood Risk Assessment tool that we have available can provide accurate data, and it will create more informed clients that have the information they need to help them make informed purchasing decisions when determining if they should get flood insurance. As noted earlier, the insurance professionals really are viewed as the experts in the field. They most directly impact consumers' understanding of flood risk and insurance coverage. So they were the ones that the clients and consumers were talking to get questions answered about coverage, cost, types. Even though many consumers noted that it's still a difficult thing to understand. There were some times where they didn't know what questions to ask and really were not sure of really what they needed to ask to get the information that they wanted. Insurance professionals can help to improve customer experiences and ensure clients have the coverage they need by offering detailed education on insurance options and policy specific so that clients can see the whole picture and make better purchasing decisions. Finally, lending professionals, they're crucial to integrating flood insurance considerations into discussions of the financial aspects of property ownership. And again, providing clients with access to detailed risk assessments and better education on flooding and flood risk can help ensure borrowers are protected against flood-related damage and loss, as well as to make sure they are aligned with any regulatory requirements for flood insurance. Next slide. Professional organizations in this study referred to large member-based groups from a particular profession. These groups become a key piece to advancing industry knowledge through professional development, continuing education, and advocacy. Development of specific education programs and resources can help to enhance the professional knowledge base and capabilities of those industries working within flood risk management. And finally, public sector agencies such as state and local governments oversee flood programming and implement policies to reduce flood risks. And these groups can enhance community resilience and preparedness by reviewing and updating regulations as needed, investing in accurate risk mapping, and disseminating information to the public through a variety of engagement and outreach opportunities. So that just gives you a little idea of a little bit more specifically into the qualitative piece of this study and the findings that we had as part of this effort. Christina and I are here. We're happy to answer any additional questions or provide any other information if anyone has anything they'd like to ask us.
Thank you, Nicole.
Sure.
I'm curious, did you have any specific recommendations? I know you have the findings, but specific recommendations
Sure.
for these professions?
Sure, and I can actually, I know last time we did provide access to the full report, which I'm not sure if it was printed or if it was just digital. I actually do have, if you would like us to share this, we do have just a handout of just the recommendations that were put together as part of this study, and I'm happy to get those out so that they can be shared if you'd like something separate. So we really, we broke down our recommendations into several categories. So the first was professional development and education. This included, and I don't have slides for these, sorry, Bethany. This included minimum training requirements for professionals and being able to apply knowledge. So, for example, things like developing in-person and virtual training modules focusing on practical applications of flood risk assessment, insurance coverage, analysis, and claims handling. Publicize the FEMA case study library as resources for professionals to gain insights. Sharing FEMA's NFIP manual on processing flood insurance claims widely and develop similar materials for processing private flood insurance claims. And then fostering collaborations between insurance companies, real estate, and flood management organizations to facilitate internships or job shadowing opportunities. We also talked about in the recommendations, collaborating with pre-licensing education providers to integrate flood risk and insurance coverage training into their curricula, developing industry-specific training modules to cover flood mitigation strategies, insurance policies, and effective communication, partnering with regulatory bodies to develop short training modules on flood risk and insurance coverage, and encouraging professional organizations and associations to promote ongoing education and knowledge sharing. We also had some recommendations under information resources, such as continuous monitoring and improvement, developing a clear, a regularly updated comprehensive website with the latest flood information organized in a user-friendly manner, kind of a one-stop place where everyone could go and they know that they're getting accurate information and they're all getting the same information. And publicizing that website, creating a webinar or webinar series to introduce professionals and the public to the website and flood information available, and establishing a feedback mechanism on the website. We also recommended some client-focused educational resources, such as implementing a requirement for professionals to provide FEMA and PEMA client-focused resources to every client during the home buying process, making resources available in various formats and modes of communication, catering to different preferences and accessibility needs, developing specific educational resources for renters, and collaborating with relevant associations to disseminate this information, and fostering partnerships with community-based organizations, local government agencies, and nonprofits to deliver educational workshops and events on flood risk and insurance coverage. Cross-sector coordination included recommendations on joint training and non-regulatory professional forums. Under joint training, some of those included establishing partnerships to develop joint training programs or events addressing flood insurance for professionals from various sectors to come together, encouraging professionals to strengthen relationships with community leaders to increase awareness and understanding of flooding and flood risk, incorporating cross-sector training into professional development programs, and developing joint training materials providing a comprehensive overview of the home buying process and flood insurance. Non-regulatory professional forums, some of those recommendations including examples included hosting events tailored for newly licensed industry professionals to provide them with valuable information and also networking. Facilitating regular informational meetings or forums where professionals from different sectors could come together and discuss flood insurance and other related topics, organizing joint workshops and training sessions, and establishing an online platform or community forum for professionals to connect them and share resources. Client knowledge, we had two recommendations there focusing on education of clients and communication. So under education, really collaborating with regulatory bodies, industry professionals, experts, consumer advocacy groups to really establish regulations or policies for flood risk and flood insurance disclosures. Developing educational materials or resources for leasing and rental agreements to educate renters about flood risks, creating online resources such as interactive guides or video tutorials for clients to self-educate, and establishing partnerships to offer workshops or seminars on flood risk and insurance coverage. Under communication, we really focused on developing some resources for professionals to ensure that consistent client communication on those essential topics to make sure people were sharing similar information, providing professionals with training on effective communication strategies for discussing flood risk and insurance coverage with clients. Establishing channels for ongoing communication and support between professionals and clients throughout the home buying process, and leveraging technology to enhance communication and provide clients with access to digital resources. We also had some recommendations under client mindset, thinking about preparedness and community engagement. So under preparedness, we discussed, conducting research to identify trusted sources for flood risk and insurance coverage information among prospective homebuyers, sharing information from reputable sources like ready.gov or the Red Cross with clients to educate them on how to prepare for flooding or other emergencies. Providing clients with promotional items that promote emergency preparedness and provide convenient access to educational materials, and discussing mitigation efforts with clients of diverse backgrounds and demographics and offering training for professionals on how to do that. As far as community engagement, some of the recommendations included having a presence at community events, setting up information booths to provide materials and resources about flood risk and mitigation, collaborating with community groups like schools or churches to involve them in flood mitigation projects and activities, establishing task forces or committees dedicated to flood risk and mitigation and actively involving residents and stakeholders, and implementing community-wide competitions or challenges focused on flood risk awareness and mitigation. We also concluded with some future research recommendations, including research partnerships to engage in data exchange with industry stakeholders to hopefully integrate data and to analyze trends in flood insurance purchasing habits and consumer behaviors, strengthening partnerships with universities and research institutions to conduct research on best practices in this area, facilitating a knowledge exchange and research sharing through things like conferences or symposiums or workshops on flood risk management and insurance, and advocating for increased funding for research in these areas. We also are planning, and I think Dr. Serenides discussed this last time, a second part to our research that we're partnering with Pima on, which included a survey of Pennsylvania residences, including renters and landlords, to explore consumer attitudes and differences in flood insurance purchasing decisions, research to evaluate the effectiveness of different communication and educational approaches in improving flood insurance knowledge. We're also going to do this in the next part of our study with Pima, which is conduct some additional qualitative research to gain deeper insights into the consumer perspective. So the information I shared with you today was from the professional perspective. Our goal for the next phase of this project is to focus on consumers, and then analyzing existing data sources to help identify patterns and trends related to flood insurance knowledge and purchasing habits. And like I said, that was a lot. I know that is in the report that we provided to you, but if needed, I am happy to provide just the handout of the recommendations if you'd like.
That'd be great, Nicole. If
Okay.
we did that electronically, we can.
Yes, we do.
Make sure all members have.
Absolutely.
Because we consider our consideration.
Absolutely.
One of the issues that I'd put in the parking lot for our further discussion, and I think is a note that the next panel can start thinking about, is when we talk about continuing education, and I think I'd have to go to the legislature for this. Today, an insurance agent is required every 2 years to complete 24 hours of CE. 0 of them are required to be flood. We could look at legislation to require, say, a P&C agent to maybe 2 of those 24 hours or something would be in a flood-specific course. I would guess realtors have something similar in terms of CE, but maybe that's something that our group can consider if we think it would be worthwhile to require some forms of the CE of some of these professionals to be flood-specific, so those interacting with the public would have that required education as part of that process. Any other questions for the Penn State team? Yeah, go ahead.
So, in the role-specific findings slide, you're right, real estate professionals, insurance professionals, lending professionals. Do you have a sense of whether there's any thought by a property owner about flood insurance after the property is purchased? The lender is out of the picture unless there's a refinance. The builder is out of the picture, and does the property owner tend to just buy property owner's insurance at one time and continue to renew with automatically the same company or agent? Are you aware of any other opportunity for a discussion or a consideration of flooding to flood insurance other than when the water's rising?
Right. Otherwise, when it's actually happening. Do you have any? I think a lot of the work that we did, and I think we might delve into this in the part 2, which we're focusing on consumers and kind of maybe some additional touch points with consumers after the purchase. From what we found in our interviews, once the purchase of the property, that was, I'm just going to renew this, or maybe there was some mention of if I paid off my mortgage and I no longer needed my flood insurance, well, then I might get rid of it because it's additional expense that I don't need to have. But other than that, it was really focused heavily in the home buying process. And once the home was, purchased, and unless there was some type of an event that they had to worry about, no, there wasn't any other discussion.
Your community engagement recommendations may go towards addressing that to some degree.
Absolutely. Yeah.
So assuming the polling you did as well as the interviews, what kind of cross-section across the state?
So for the survey that we do, that was for Pennsylvania adults, and that is actually run through our, it's an omnibus survey that we do twice a year at Penn State. That actually is representative by age, sex, and region. So we break the state into 6 regions. So the results of the survey are broken out by region. Now, for the interviews, because we relied on individuals just contacting us and saying they were interested in participating, we didn't have any type of set quota for we need to get so many from this area, so many from that area. I will say that we did get a lot of individuals from Southeast Pennsylvania, especially because a lot of them were involved in either flooding themselves or did a lot of work with properties that were in flood zones. We did, there was South Central Pennsylvania, North Eastern Pennsylvania. We did have a few in Western Pennsylvania, but not as many. The second iteration or the second phase of this project will be a little bit different, as we will be targeting with consumers some different geographies. But for this, we wanted to really just focus on professionals. And to be honest, we weren't sure how the recruiting would go and whether or not people would, be willing to participate. So our association partners were fantastic and really helped us, get a lot of people that I think had a really good level of knowledge. We had some newer professionals. We had some people that had been in the field for a long period of time, and some that were really knowledgeable about this, and others that maybe were not. And so I felt like we had gave us a good picture of professionals.
So with that, did you see any difference within regions from the feedback?
We definitely did see in Philadelphia.
Yeah, in the southeastern region, especially just because there's just been chronic flooding within the past, 10-ish years, gave a lot more of that personal experience and working with their personal background, and then working with these flood areas, whether they were in the lending industry, the real estate, or the insurance industry. So,
yeah.
Thank you.
Yep.
Other questions?
What were the types of responses that you did receive from the poll? Because I know that you didn't delve into it here, but the types of responses that you actually received.
The poll did not include any open-ended questions. So the poll was strictly asking, I believe it was 5 questions, where we asked individuals, if they owned or rented their home, if they had flood insurance, if they carried flood insurance, if they did carry flood insurance, who told them to get that flood insurance, and if they didn't, why didn't they? So that one wasn't, we didn't dig as deep as we did with the professionals. This really was, this first part of the study was focused on a professional's perspective. And the consumer questions that we included on our poll were just to kind of give us a little idea of, who had flood insurance and what they knew about flood insurance, where they got their information about, why they should buy it or if they should buy it. And the second piece of the study that will be starting very shortly is solely focused on consumers. So we will be doing a survey as well as in-depth interviews. So we hope to be able to share additional information when we're done with that.
And the in-depth interviews, you'll be looking at different aspects of consumers. For example, those that have never even been in a flood zone, that have not purchased in a flood zone.
Yes. So we're working with our director, who's the principal investigator, Dr. Saranides, and we've come up with kind of a grid sampling plan where we will be pulling out people that, that live in a flood zone but don't have insurance, people that live in a flood zone and do have insurance, and just kind of making sure that we have individuals from all across the state, and also making sure we're pulling people from both inside a flood area and not in a flood zone, so that we can start to get some of that information. And we'll be doing that for both the survey and the interviews.
Is that something we're going to have back before
it is not going to be done before.
Later this year is when you think
Yes.
it would be done?
Yeah. I believe we have until, Tom, I want to say it's probably July 2025.
Next month.
Next, oh God, Tom, you're giving me a heart attack. My face went white. I was like, oh boy, I have a lot of work to do. I believe it's July 2025 when we are supposed to wrap that work up.
Well, I mean, if there's any incremental updates that you might be able to provide.
Sure.
As we near, I mean, we have a July 1, 2024 deadline.
Yes.
So maybe there's some information that you'll have by closer to that date that will
Sure.
bring you back towards the end of this and see if there's anything to incorporate into our potential report.
I will say that the survey that we're going to be doing, our plan is to do that first. So we may be able to share some, baseline or preliminary information from that. But the interviews are planned for after the survey. So the survey is something that we could probably share some interim data on.
Good, thank you. Any other questions? No? Well, Nicole,
Awesome.
thank you very much. We
Sure,
appreciate your
thank you.
participation. So next, we're going to bring forward a panel that includes representatives from the realtors, the insurance agents, and the banking community. We have a special guest moderator, Terrence Milstead, who has experience moderating similar panels in a past life with the state. So Terrence, I'll let you turn it over to you to introduce yourself and the panel.
Thank you so much. I really appreciate it. It's good to be here. Thank you, everybody. So good to see the panelists again. We met online last week. So just to fill out a little bit of what you just mentioned in your introduction, my name is Terrence Milstead. I currently work with the Commonwealth. I'm at the Commonwealth Office of Digital Experience, which some of you might have heard of. It's a new agency that was created last year for the purpose of improving the digital experience. And I am the head of user experience research. So much of my job involves facilitating conversations with people who access Commonwealth of Pennsylvania websites and trying to figure out how we make those better. The reason I'm here today is because in my previous job, where I worked with a consulting firm called Ogilvy, I actually had a single client for 4 years. That client was FEMA. And so over a period of 4 years, I facilitated, I don't know, maybe 50 discussions like this around the topic of flood insurance and what are the obstacles to increasing flood insurance coverage. So very happy to be here again today. David, thank you for inviting me. I'm going to caveat all this by saying that it's been a few years since I've been out of this space. I went over to working with corporate clients for a few years, and now I'm back in government. And so I know things change quickly. So if I use terms that are outdated, or I'm going to take a learner's mindset here, and I think that it'll be helpful for people to correct me if things have changed, and then that'll also help people who are listening as well. So having said that, let me go ahead and introduce our panelists. So I'm going to start at the end with Bill Bradfield.
Sorry about that.
Who I know.
My best.
Yeah. Bill and I worked together back when FEMA was my client. He wasn't at FEMA at that time, so good to see you again, Bill. Bill is the FEMA Region 3 Flood Insurance Liaison and a flood insurance outreach specialist. In this role, he promotes the importance of flood insurance in building resilience, and he serves as a liaison between industry, government, consumers. And Bill is also a certified floodplain manager. Previously, he served as the state NFIP coordinator. That's the National Flood Insurance Program. I'm not going to make any assumptions here about acronyms and what people know, so I'm going to try and spell everything out. So he was the state NFIP coordinator and worked with 2,500 communities that are enrolled in the National Flood Insurance Program here in Pennsylvania. So Bill has a wealth of knowledge. He was also previously a flood resilience program analyst at CEDA-COG, Council of Government, which is a governmental body that I think covers 11 counties in central Pennsylvania. Yeah. So Bill, welcome. Thank you for being here.
Thanks, sir.
Yes. So Bill, before you get started, would you mind rotating to the other side of Terrence? I feel like I'm talking.
No, that's fine. I wasn't sure. The camera's here, but over there. So, yeah.
Great.
That's all right. Yeah.
Great. So while Bill is adjusting, So next we have Cheryl Snyder. Hi, Cheryl.
Hello.
Cheryl is the Compliance and CRA, which is a Community Reinvestment Act Officer at F&M Trust Bank. She joined F&M in 2011, has 35 plus years of experience in the financial services sector. In her role, she serves as an organization-wide resource for compliance and also for any of the Community Reinvestment Act activities. Yes? She has her MS in Geoenvironmental Studies with a focus on land use and human population, and she has her undergrad degree in Business and Economics. Did I get all that right?
Yes, you did.
All right, Cheryl, thank you. So we have two Marks here, so we're going to have to do something here. One is going to be Mark K, and the other will be Mark M. You're Mark M, correct?
Mark M.
Mark, good to see you.
I got that too, we're good.
All right. Mark is an independent insurance agent in Westchester, close to where I live.
Correct.
Yes, he's got 35 plus years of experience in property and casualty insurance. He's a member of the Insurance Agents and Brokers of Pennsylvania, Maryland, and Delaware. Former chair of that body here in Pennsylvania, currently serves as a national director representing Pennsylvania independent insurance agents in the Independent Insurance Agents and Brokers of America, which I think is known as the Big One.
Big I.
The Big I, the Big I, great. And he also serves on a flood insurance subcommittee.
Correct.
Great.
Thank you.
And then to my immediate right, we have Mark K. Mark Kibbe, who's with the Pennsylvania Association of Realtors, currently in Erie. You work for Keller Williams?
Correct.
Yep. 2020 president of the Erie Board of Realtors and serves as the district vice president and legislative committee vice chair for the Pennsylvania Association of Realtors.
Correct.
Correct? Great.
Lots of hats.
Yeah, good to see you, Mark. Okay, and Jonathan, I believe, who's here providing staff support, is that right? All right, excellent. So we're going to jump right into it. So this is a big conversation, I think, and again, this is not staged, so people can correct me in real time if I'm wrong. I think the goal here is to figure out how to increase flood insurance coverage across the state and what some of the obstacles are to seeing that happen. So that's a big conversation. It could go in a lot of directions, but I think to keep it focused, we'll focus on three sort of main ideas. One is going to be insurance affordability. The other will be communication challenges, and some of this, that was really interesting, by the way, thank you. A lot of this really, I think, is going to build on the Penn State study. And so the third is going to be perceptions or misperceptions of risk, right? So if I start to steer the conversation back, it's not because I'm trying to hear myself speak, it's just I want us to keep this focused and tight. And at the end of it, I think what might be helpful is if we have actionable things like what can be done, what are next steps, as opposed to just having a lovely conversation. So I'm going to try to direct it towards what can be done next. So first question, and this is going to be for all the panelists, and Bill, we'll start with you here. I want you to tell me, what do you think is the single biggest obstacle to increasing flood insurance coverage in Pennsylvania, and why is that obstacle?
Yeah, I guess I would have to default to the cost. Affordability seems to come up over and over again, but I think it's right close second is just the overall awareness of flood insurance, its availability, what it covers. There's a lot of misconceptions out there. So I think if you can address the misconceptions, then you can also have another conversation about the cost, and you can tie those two together. But when we talk to folks, post-disaster, it's usually, flood insurance was too expensive. I can't afford it, or I heard today, so much of what you did resonates with everything that we've heard. But I paid off my mortgage just so I wouldn't have to pay flood insurance, but they're not self-insuring on the back end, or they're making financial decisions just to get out from having to pay for flood insurance when we know that there's a known risk there because they're in a flood zone. So that's a concern. But I would say affordability is probably preeminent. So
Bill, I'm going to come back to this in a second, but I want to do a round robin first. When you say affordability and perception, is it misperceptions of affordability or misperceptions of risk?
I think it's misperceptions of risk, but I also think it's then they want to know, well, why is my flood insurance expensive? And the flood insurance is expensive in their minds because it is tied to the risk. And that's what we see now, with our, pricing approach and where we've taken the NFIP insurance and also the private market. When you get a quote and your premium is based on your actuarial risk. So, it looks expensive, but it's also expensive because it's commensurate with the risk of that property.
Okay, thank you. Mark, same question. Mark K, right? Mark to my right. Got it. Mark K, what is the single biggest obstacle to increasing flood insurance coverage?
So obviously representing real estate buyers and sellers, in this case, mostly buyers we're talking about. Bill hit the nail on the head. The cost, affordability, especially you guys, I'm sure everybody in this room is very aware of what the market's been over the last few years. The real estate market has been very vibrant, shall we say. Costs of real estate going up at levels. I just see properties selling for amounts that I just never would have thought possible. So customer or buyers are squeezed. They're looking for any possible way to reduce the costs associated with making that purchase, because the price of the property itself and the mortgage principal payment on that is extraordinarily high. So everything we tack onto that is making that property less and less affordable. So yeah, cost. And I think one of the other challenges, and when we raise flood insurance, we always talk about floodplain maps. And if we do, we'll get into that more, I'm sure. But that age-old thought, 1 in 100-year floodplain. People say, well, 1 in 100 years. For them, that risk is minimal. So they say, well, I don't need to get this because, chances of this happening in the next 100 years when I care about it, it's irrelevant. So that's a big challenge, is the communication. I know that was addressed in the study, that verbiage, that's critical. I certainly, in a personal role, we have a little pond up our way called Lake Erie. So we deal with water a lot of tributaries, a lot of flood zones. I've had a lot of personal experiences working with clients, both on the buying and the selling side. And there is that, I don't really call it a stigma. I think it's not so much a stigma. I mean, if you're on the water, I sold one recently on a river, and you can launch your kayaks right into the river. That's the plus side. The negative side was the cost of the flood insurance, and it did make it more challenging to sell. But, that's what we have. I think, again, back to the full circle, back to affordability.
Okay, thank you, Mark.
Sure.
Mark. Hi.
Thank you. Along with affordability, I think there's a lot of confusion out there concerning what flood insurance is, because, a few weeks ago, I got a phone call from a client who said, my basement's flooded. Well, how did your basement flood? Well, it was a hot water heater. So there's that confusion alone, how flood is used as common terminology, is one of the hurdles, because a lot of people think that their homeowner's insurance will cover flooding, especially if it's in their basement. So I think we have to educate the public more, from the standpoint of coverages for a water loss in the house, that if it's a pipe or a vessel that ruptures, yes, they're going to have coverage for that under their homeowners. But if the creek or the river overflows and starts flooding their street, then there's a problem with having flood insurance.
Great. Yeah. Thank you. Cheryl.
Well, from the lender's perspective, we're usually the ones who are first to tell them that they're required to have flood insurance because it's a minor event. We're making, increasing, renewing, or extending a loan. And that we are usually the bad guys telling them that they need to obtain flood insurance because we ran the report and we get it back. And unfortunately, they don't like that. And it's expense that they don't want to incur. Again, affordability. We've had people that have removed their decks or unattached them from the property to avoid flood insurance because the deck was in the flood zone, but the corner of the house was not, so they unattached it. These types of things, they're misunderstanding the risk, that confusion about the risk itself, and really if something happened to the deck and it's that close, probably going to damage your house anyway if there's a flood. So there's a lot of risk that's not understood, and it's more of an avoidance to try to avoid that.
Okay, so what's common about everyone's responses is affordability was right at the top, but it intersected with confusion around some of the terms. So let's just deal with affordability separately. Bill, I'm going to come back to you. So I think I know the answer to this, but I want to hear you fill in the blanks here.
Thank you.
Okay, and again, this is partly for the benefit of anyone in the room who's new to this conversation. The National Flood Insurance Program is, give me a definition in 3 sentences.
Okay, it's created by Congress, and it provides flood insurance. It's federally backed as a result of the act that was passed in 1968 when the insurance market was getting out of insuring areas that were flood prone. And there was a significant problem. So the government stepped in and created this program to say, you know, we will adopt minimum standards and we will take on the mapping of these high-risk areas. As a result of adopting these maps and adopting these minimum standards, we will make flood insurance affordable to you. Well, hopefully affordable to you, but available. Excuse me, I used the wrong A word.
Okay, you got
affordability on the mind.
So here's my question for you then. Can you tell me a little bit about NFIP rates? What those look like if I'm, I don't know, say somebody who owns a piece of property in rural Pennsylvania, and I want flood insurance coverage through the NFIP. I'm one of those 2,500 communities. What does affordability or availability actually look like to me in terms of dollars?
Yeah, so that has gotten to be a pretty tricky question with the advent of the current NFIP pricing approach, which was also formerly known as Risk Rating 2.0. With the modernization of the NFIP, we are looking at many more variables. We're using, more data sets, stronger, more catastrophic risk modeling, more in line with the private industry. However, because of all those variables and looking at the unique individual properties risk, it's much harder to have that conversation than it was before when it was a much more simplistic rating, whether it's very binary. We look at it, are you in or are you out of the floodplain? If you are in, do we have a base flood elevation? If we have a base flood elevation, where is your lowest floor in relation to that? What type of foundation do you have? That was it. That was how insurance was rated for the most part. We are now looking at many variables. Aside from some of those, we no longer use flood maps. That's only to establish the mandatory purchase requirement. But we look at distance to flooding source, relative elevation to flooding source, not only foundation type, occupancy type, replacement cost value. So, I could go on and on and on because we have slides and slides, but there are many factors that are now going into rating. So it's challenging to have these conversations with some folks only because what may be affecting your neighbor's premium may be completely different than what's driving more of your premium based on those risk factors.
I hear you.
If that answers your question.
Well, Bill, and I know you, I like you. I think we have a good relationship, but I'm going to push you a little bit here.
Go for it.
Right?
Yep.
Because
Okay.
if I'm a resident in rural Pennsylvania and you tell me that, right, I'm going to be scared.
Okay.
So ballpark it for me. If I'm somebody who I'm told I've got a federally backed mortgage, I'm in the floodplain, I have to have flood insurance coverage. Is there a ballpark now? How do we communicate that to somebody who's scared about affordability?
Well, I think one of the important things we need to do right now is more so than ever, we need to engage insurance agents early and often because they have the unique ability to go into the rating engine and run these numbers and have these conversations that we are not able to have at our, at our level. So I think it's making sure that relationship exists early on, so they can have that. But stressing the importance of considering some of these factors as of all of them. Yes, the closer you are to a flooding source, the more likely your risk is going to be. The lower your grade is, the lower your finished floors are to the ground surface, the more likely you're going to be flooding, unless you're elevated like on a pier, post, or pile. Yeah. So it is a challenging one, but I think globally we can look at some of the tried and true. The higher you are, the farther away you are from the flood source, the better off you are going to probably be.
Okay.
But that is also hopefully driving them to have that conversation with their agent.
So let me then bounce it over to our insurance agent.
Well, it sounds like Bill's handed the baton to me.
Yeah, absolutely. So what's the answer?
So the answer is, in real numbers, a client or home buyer can buy up to $250,000 of coverage on their home through FEMA, up to $100,000 of coverage on contents through FEMA. The range of premiums that I've seen in an A-risk zone, which is one of those acronyms, is flood insurance rate map zone, to a low-risk zone, which would be like an X zone, the premiums can range from $500 a year up to $5,000 a year. I mean, that's how big the range is. It's a 10X. So depending on where the property is and all the factors that Bill has cited, that's where your premium will be. So the rate, we've gone through in the past where it used to be a chart on a table or a spreadsheet. Now you have to put the data in and let the computer figure out all these factors and give you the rate.
Yeah.
And I think that's what I was trying to allude to. We could speak more in generalities under the legacy system, but because of the complexities of the rating, it's more accurate.
Correct.
But we can't generally just say, oh, well, if you're over here, 700, over here, 1,000.
So there's clearly a communication challenge. Sounds like it's compounded with the new system in terms of being able to give a potential homeowner something that could help them have a sense of how their budget's going to be impacted.
Correct.
Yeah. Let me ask you this: are NFI premiums continuing to rise?
Well, the new rates come out again, right?
It depends.
Right.
So to back up real quick, under the legacy system, when we had the passage of the Bigger Waters Act, I don't mean to go on a history course and not too many deals, but Bigger Waters in 2012 was the first attempt to kind of right the ship with the NFIP, and overnight we moved everyone to full risk premiums, and that was a pretty steep jump for a lot of folks. You're going from 500 to 3,000. So in 2014, they had the Homeowners Flood Insurance Affordability Act they passed to offset that, to say, look, we know that folks may need to be paying here, but we can't just jump them overnight. So they started adding on an 18% surcharge. It was called the glide path. Everybody's premiums increased 18% every year until they got to that point. Where I'm going with this is, under the legacy system, everyone's policy was increasing 18% every year to get to that point. With the advent of the new pricing approach, aka risk rating 2.0, for the first time, we actually saw a number of premiums, about 25% of them, decrease. That had never happened in the history of the program. So there were a significant number of NFIP policies that were actually overpaying. So they saw an immediate decrease. A large chunk of those probably, I think, and there's a different state breakdown that we can share, but a lot of them saw increases on their premiums on the average of $10 to $20, which was in line with the 18% increase they would have seen otherwise, had nothing changed. So it's really a very, smaller subset at the very far end that saw a pretty significant change as a result of the move to the pricing approach. So it's just an interesting breakdown there, but we are seeing a range of premiums.
Okay. So, Marquet, how is your day-to-day, how's your business, how's your bottom line affected by changes that are happening, either positive, upwards, downwards, related to insurance premiums?
Well, it's, even under the old system, it was still a substantial cost. I was actually disappointed. I know they only interviewed 10 realtors, but just even the notion that there was somebody out there suggesting that, don't worry about it, this isn't a big deal, that's something that shouldn't happen. I mean, I'll acknowledge that right now. I certainly, in my practice, and I don't have any anecdotal evidence of other realtors, certainly in my board, doing that kind of stuff, because again, we're very focused on water up our way. So, we want to make sure they understand that risk. It's just, I think it's just continuing, whether under the old system, the new system, it's still, and Mark just mentioned it, $500 to $5,000. Erie is not Philadelphia. I mean, our price point is definitely not as high as other areas. That becomes a big chunk of the investment. So now, having said that, I mean, obviously the market, because of the decreased inventory, it's still moving strongly, but those homes that are in flood areas definitely take longer to sell.
Yeah.
So that is a truth. We just want to make sure, and it's all part of the communication, is folks are going in with their eyes wide open. I mean, they're going to make the decision at the end of the day, but I do not want to hear somebody saying, I never heard about it. And that's something we do. And we have our seller's disclosure has a substantial section that sellers have to fill out and explain, are you in a flood zone? Do you have flood insurance, et cetera, et cetera, et cetera? Has there been any water intrusion? And it's the agent's responsibility to make sure those questions are answered. The agents don't answer them, obviously, but we do make sure those are answered. The estimated cost sheets that are provided to clients has a flood certification line. So there's a lot of areas, in addition to what we tell them verbally, where they're given these flags and just, this is an issue. You need to at least, and then we do then steer them to the experts. We do steer them to the insurance folks, because again, I mean, you're with FEMA, and it's a struggle. I mean, yeah. And for us, we can talk about market value, we can talk about marketing, we can talk about a lot of things with some level of expertise. But the flood insurance, we have enough information to be dangerous, but we definitely want, our main goal there is to get them to the experts.
So I want to come back to that, how you communicate around flood risk as a realtor. But right now, let me ask this other question that's on my mind. And Mark M., this is, I think, for you. You and Bill can tag team on this. So here in Pennsylvania, is NFIP the only game in town, or is there private coverage for insurance?
There is private market coverage out there.
Okay.
There is. So in many instances, they do well compared to FEMA in terms of price, because they have, I think, more leverage to get in and out of a risk than FEMA does. FEMA is on the risk for the lifetime, whereas private market can get out. And we've seen this, like I had several clients. Downingtown, PA, which is southeastern PA, had some remnants of Ida, I guess it was 2 years ago. So we had a whole block of homeowners and multiple ones that had private market flood. And after they paid the claim, but then they non-renewed. So, that's what happens. They insured the property maybe for 1, 2, 3 years. There was a catastrophe. They paid their claim, and then they got out. So FEMA is left, quote unquote, holding the bag, sandbag.
No, it's interesting. Our associate administrator, David Marstead, mentioned that last year at one of our conferences and said, if you were building an insurance company that was based on risk and based on insuring flood risk, but you were only going to insure the highest risk areas that incur the most losses, that's the worst business model you could have. That's really the only area that the NFIP can occupy.
Correct.
Now, private has made significant inroads where they have found areas, and we fully encourage private. It's about insurance. It's not about NFIP or private, but we do know, and we've heard, they can offer things outside of our regulatory requirements, but they can also drop. They can change. I've been told by private, I know specific areas in Pennsylvania where some will not write because the risk is too high versus other areas. So it's a gamble, and we always, anytime I'm talking with someone, I encourage them, get an NFIP quote, but also get a private quote. Educate the consumer and let them kind of take a look at the risk and what the range is and what they're comfortable with.
So I'm usually of the mindset that competition is good, right? And that it drives down costs. So here's my question. If there's a private insurance market here in Pennsylvania and it's doing well, as you say, as it continues to do better and better, is that going to lower premiums in the NFIP, or is that not affected by that type of competition?
I would have to say at this point, I'm not sure, because our premiums are based on what comes out of our risk rating engine.
Okay.
So all factors going in, unless there's significant change to the variables going into the engine, I can't imagine where our premiums would change based on the competition. Like, we're saying, based on what we have, this is what it needs to be. Private is welcome to do what they want to do.
So what I'm hearing is that there is a private market, it's doing well, but the risk is that there's not as much of a safety net.
Correct.
Okay.
But it does get back to our point number one, which is help affordability.
Yes.
Because they want to go and write risks that they think they can be profitable on, but once that profitability goes away, then they go away.
Okay.
They move out.
Cheryl, let's imagine that.
Terrence, one question for Bill, I think. And I'm curious if you have this data outside of flood zone on kind of the average claim cost, because I think it's going to vary. But I mean, we've seen, and I only know this because I was fortunate enough to have a budget hearing last week, and we had some questions about flood. So in following up for responding to those questions, we looked at the average risk rating 2.0 premium. As of September 30, 2022, it's $1,000 a year, $1,075. But one area that we've been talking about outside of a special hazard flood zone is lower limit policies that we see particularly in the mutual market, that could cover up to, maybe it's a $15,000 policy, maybe it's a $50,000 policy, but that's available for about $40 a year. When you talk about affordability, if I'm outside a flood zone but still worried about a flood, I'd be curious in how those limits line up to what you see is kind of the average claimed cost. Again, when we move out of those special flood zones, because that's an exception. But if I'm outside a zone, I do have a basement, maybe I'm worried about flood. To me, maybe a policy of $15,000 to $50,000, certainly better than nothing.
Yeah.
If you're talking about tens of dollars versus hundreds or thousands of dollars in the case of the flood zone.
No, I think it's an interesting point. We could probably look at the data. I don't know what it would specifically be in terms of, what the premiums are versus claims. But yes, once you remove the mandatory purchase requirement, then you're not, if you have a $200,000 mortgage, but you're outside the flood zone, you're not required to carry $200,000. So then you can start to play with the coverage limits and the deductibles to make that more in line with maybe where someone wants to insure their risk, but not go all in based on what, their perceived risk. So, that is one of the ways that right now you can address affordability with the NFIP, but something that we could look into a little bit more with what the actual numbers are.
Just curious to see how closely
it's there. Once you're out and there's no mandatory purchase, you can start to play with those a lot more. It's just once you're in, and you're locked in.
Thank you. No, absolutely. Great question. So, Charles, what I was going to ask you was, if I'm a first-time home buyer, I've been working with you, secure a mortgage, everything's lining up, but we just can't get the numbers to work, right? And it's that insurance cost that's going to be the deal breaker for me. How would you help me? How would you counsel me?
There's just not a lot of room with the debt to income ratios, and the affordability of your payment, and we call it back end, front end, but if you are including the insurance premiums and so on, it can make or break that deal. It really, it's some people have to walk away.
Okay, so that's the reality.
That's the reality, right?
Are there federal, state, local resources that in that moment you might direct somebody towards so they at least have a chance of closing that gap and getting into that home?
It depends on the program. There may be programs available to them that have a higher debt to income ratio requirement. But it's a lengthy process for them to have gone to that point and then find out that they don't qualify for this one. It's basically a start over and go through this program.
Okay.
Those programs that have the higher debt to income ratios, they're primarily subsidized by the government in some way, some shape or form. So,
Terrence, one other question, because I think this was an interesting point that Cheryl made earlier about the mortgage banker being the bad guy. To me, and we talked about this at the first meeting a little bit, it shouldn't be by the time I get to my mortgage banker that I know that there's flood risk or potential past flooding of the property that I'm looking at. And we talked about some of the timings of disclosures and whatnot. So I'm really curious in digging into that a little bit more with the panel. And I know some of our neighboring states within the last year or so, I think Delaware maybe just did it last year, or maybe it was New Jersey, beefed up kind of the realtor disclosure statements on history, and I don't know when that's required to be given as part of that process, but it seems like there may be a move in at least the Northeast zone to kind of strengthen those disclosures and maybe make them earlier in the process. So I'm just kind of curious on the banking and realtor perspective in particular, kind of when would be most helpful for that information to come to the consumer?
Yeah, let's go there.
Well, with respect to the seller's disclosure, that's actually something filled out by the seller that we provide, that every buyer, potential buyer has access to. Their agent has access to it through the MLS system. So that's a very public document. And as I said, I actually have a copy with me, but it's a fairly substantial section of that does deal with flood issues. So that's provided to the client even before they're thinking about making an offer. The other thing that it happens before they make an offer is we have like an estimated cost sheet. So we work with their lender and usually request of that lender an estimated cost sheet. If we were to make an offer of X, $100,000 for this property, what are all the costs associated with that purchase? One of them, again, is insurance, and we urge them to also talk to their insurance folks to be able to supplement this, but obviously the lender is coordinating hopefully with the insurance folks too. So we try to get as much of that information in their hands even before they think about making an offer. So hopefully we don't get to that point where they're halfway down the road, they got a contract in place, and then suddenly find out, oh, maybe I can't afford this.
So let me ask you a question, Matt.
I just would have one follow-up on the disclosure. I mean, the disclosure is typically like to the best of my knowledge, right? Like there's nothing, no teeth or additional, I guess, requirement to it. I've bought too many houses lately, and it's, I mean, here and in Tennessee, and the disclosures aren't always as complete as I would like to see them.
Sure.
I think you have some leeway with pushing back and forth, but would be more curious, and we could follow up afterwards about kind of what you think or the association thinks generally about kind of the move towards these more comprehensive earlier in the process disclosures and whether that's helpful. And before you answer, I'll kick it over to Deputy Secretary Cameron.
Sorry, I just had something that may be a piece of information that might help with regards to understanding the timing and the issue that maybe the banks see at the, closer towards closing is the timing of the flood cert, which is the requirement, right, to obtain the information about whether or not it's in a flood zone and whether or not it's a requirement. So not coming from the seller and the realtor's disclosures, but when the bank processing of the mortgage processing of the actual closing documents is obtaining that flood cert. And that timing of when that flood cert is obtained then may direct when the pricing of the flood insurance then is obtained. And then final disclosures to the consumer go out. So I don't know, I'm just throwing it out there whether or not that discussion needs to be had to understand why it gets to a closing, why it's getting that far. It might be the flood cert.
So let me ask a question here, because I bought a house a few years ago in Philadelphia, kind of went to closing, and it was page 25, I think, of the document that I was signing where there was something about this is the SFHA. Now, that's fine. That was that realtor. It sounds like you have a conversation much earlier. If I'm working with you, are you the guy who shows me the houses?
Absolutely.
Okay, so you're taking me around, you're showing me houses. At what point are you going to say to me, so, there's a creek back there, you're in the SFHA. When does that happen?
Well, the initial thing I do, if I'm going out to show a house in our MLS system, and I think this was addressed in the study, there is a button we can hit that shows a flood map, and it gives you at least an initial indication whether this property is potential. And I just showed one the other day that 2/3 of it was in a flood zone, it was a vacant land, and that obviously went into their decision whether they could build on that property. So we do it right out as before we literally go out to show it. We give them some information about the property, including that initial assessment, whether it may, that's not, conclusive. And again, you mentioned that you've got to run quite a series of detailed inquiries to figure out what exactly the level of risk is. But so we hit it pretty early. And the Pennsylvania Association of Realtors, we have a standard forms committee that every year, multiple times a year, re-examines all of our forms, including the seller's disclosure. And over the years, that section on flood insurance has been beefed up. It continues to be beefed up. It asks the seller, do you have flood insurance? Do you know if you're in a flood zone? And you're right. I mean, is every one of them filled out precisely, accurately? Probably not. But in most cases, if they have flood insurance, they're going to disclose it. And we certainly make sure they fill that out and ask them point blank. If they leave it blank, we say, we need to fill this in. What is the answer? But you're right, back to the cert, until you do that, I guess that's the point where you really know what you're dealing with when you do that flood certification. But
So I've noticed, and I don't know if this is in the last couple of years, that if I go to a Zillow, for instance, that it tells me on there whether or not the property that I'm looking at is in the flood zone. Mm-hmm. Is that a recent development? It is? How did that come about?
I cannot speak to how it came about, but I know it was with kind of commensurate with the First Street Foundation and their flood factor. Redfin, Realtor.com, a couple of them will put on hazard risk, flood being one of them. So it may identify FEMA flood zone, flood insurance may be required, and then it will give the flood factor score, out of a 0 to 10.
Okay.
Sometimes I've noticed that, I think it was one of them, the Redfin, it was pretty high up on the list early on. It slowly moved down, so you got to dig for it. So, I mean, you need to expand some of those boxes, but at least it's there. But again, I don't know if it's enough information. If you found your dream house and it's where you want to be and the price point looks good and the school district is good and you're scrolling all the way down through, if you just see a line that says FEMA flood zone AE, flood risk factor 6, okay, that's fine. This is my dream home. Where's the connection today to say, do you realize the implications of all of that?
So why don't we actually use that to pivot to communication, which I think is where the conversation is starting to go. So when FEMA was my client, there was the saying, anywhere it rains, it can flood. Meaning that if you're in the special flood hazard area or you're outside, it doesn't really matter, you're still subject to flooding. And I've always, I'm not picking on you, but so if you've got a federally backed mortgage and you're in the SFHA, you have to have flood insurance. But if you're 10 feet outside that line, you don't have to have it, right?
Right.
So, how?
Real quick, can I go ahead?
Please.
That's the mandatory purchase requirement as written in the regulations. It is completely up to the lender's discretion as to whether or not they may require it. I just want to qualify that. So there are instances where someone could be just outside the floodplain, but they have a mandatory flood insurance purchase requirement placed on them by the lender, given the risk.
Okay,
so
that's
I just wanted
No,
to.
you're good. Thank you. I needed to know that. So let me then turn back down here. So here's my question for you, each of you. Right now, how are you communicating flood risk? And by that, I mean specifically, just like in a sentence or two, what is the message that you're trying to put out there? And how are you doing that?
Well, whenever we do have the certification come back, and it says it's in the floodplain, we're required to notify the borrower. And if, by regulation, before settlement and reasonable time frame, notifying them that they must purchase flood insurance.
So what does that notification look like? Is it a form letter? Is it a phone call? Is it face-to-face?
It's usually a form letter. And oftentimes, because of trying to work with customers and be proactive, it's a phone call as well.
Okay.
Or some sort of a meeting. Because we want to make the loan, it's not like we want it to drop off. There's a lot of work involved going up to that point, a lot of expense.
Okay. But before I get that form letter followed by a phone call from you, I'm far into the process, right?
Yes, you are.
So who comes earlier and how are you communicating flood risk?
It's probably us. I mean, realtors definitely, we're the point of first contact in most instances. Sometimes we get referrals from lenders and things like that, but the reality is we're the first point of contact. So again, as I alluded to earlier, we're going to point out, here's the seller's disclosure, here's what they say about that particular issue, the flood insurance issue. We're going to do a little preliminary research to find out if it appears to be in a flood zone. Now, I will say I've had clients do everything possible to avoid being one. They'll go pay for an elevation certificate to be done. Whatever they can do to avoid it, they're going to do it. And again, many cases where their mortgage is done, they get rid of the insurance. So, that part, but then the follow-up is then we give them as much as we have, but then we say you need to now talk to the expert, call your insurance person, make sure and let them tell you what it's going to cost in the way of premium.
There was a study that came out of Old Dominion several years ago, not even several, maybe 4 or 5 years ago, and Penn State folks have left. But if I remember correctly, people who were surveyed, 60, almost 70% of people thought they might have flood insurance, but they weren't sure. They thought it was included under their homeowner's insurance. So how are you doing anything specifically to dispel that misperception that flood insurance is included as part of your standard coverage?
So we would be talking about existing clients and running, like we do in our agency, a birthday campaign. Once we have a client, we're recognizing their birthday. And then there might be a time of year, like, for instance, life insurance has a month, quote unquote, in September, a life insurance awareness month. So we're doing a blast email to our clients, piggybacking on that communication. So, maybe we look to establishing a month where you can promote flood insurance, from that standpoint.
And we actually do have that now. We have flood awareness weeks, and flood awareness, actually Maryland does a flood awareness month. They're coming up, but historically, before I came into this position, a lot of that messaging was pushed to the NFIP offices and the emergency management offices. We are we're actually meeting with the NAIC and some folks soon, but I'm hoping to make inroads because I want to loop the departments of insurance into this, trifecta to say, like, anything that gets pushed out for flood insurance needs to fully go to the insurance departments and the agents as well, and not rely on it going to the county, the municipality, the floodplain manager, and then to an agent that they know. That's, so I think that's, and bolstering that outreach and awareness, but something we can certainly look at.
Yeah, but going back to your other question, Mark and Cheryl are seeing the new purchaser, the new client first, before me. So we're getting the inquiry, I'm buying a house, I'm pre-approved for my mortgage, the property's in a flood zone, I need a flood insurance quote too. So from our standpoint on that particular type of client, we're not doing any outreach because it's coming in.
Okay. So there was a question that was asked here earlier that I took note of, and it was about variations. I'm not sure who asked it, I believe, yes. Variations in terms of who your audience is and how they might differ on all sorts of dimensions, including how receptive they are to this messaging. I did some work in West Virginia, and there was a very distinct attitude about government, about accepting help from government, about attachment to place, right? So I'm curious, here within Pennsylvania, are any of you, and this is for the entire panel, looking at, well, in this section of the state, we need to communicate differently because of XYZ factors. That could be cultural, historical, whatever the case might be. Any conversations along those lines?
My experience has been there, and if you go on the internet, there's a ton of information about flood insurance. But I find that, and I don't want to say this in a demeaning way, but clients need to be spoon-fed and need to be spoon-fed from people they trust. So us are the people they hopefully trust, and we need to be the ones to deliver that information to at least point them in the right direction. I went on a famous site actually yesterday, for instance, and understanding flood risk, real estate lending, insurance professionals, and I looked at the section on real estate agents, and there were 2 documents here that were supposedly available to help educate your consumers. I clicked on both of them, it took me to a dead end. Yes. They weren't there. So, and I'm not picking on anybody, but those are the things we have to collectively improve on. So those are tools we can use, but the chances of my client going to this site and pulling us up themselves is probably slim, to be candid. We have to find a way to market it, but and I think we're the, point of first attack on that.
Okay. Bill, I remember doing one of these events down in Delaware about 5 years ago, and one of the panelists said the following, that the flood insurance rate map was itself a cause of some confusion.
Okay.
Because it drew a line on a map that suggested if you were on one side of the line, you were at risk. If you were on the other side, you weren't at risk.
Exactly.
Right? Which is obviously not true. Anywhere it rains, it can flood.
Right.
How is FEMA trying to get around the potential misperception that's caused by having a flood zone?
Yeah, no, that's a great question. It's one that we've tried to get away with. I mentioned the fact that, with how the NFIP rates policies now, we do not look at flood maps anymore. And we do not look at just the specific 1% annual chance or 100-year flood. We factor in many different flood frequencies from like the 5 up to the 5,000-year storm. So we're looking at a broader range. But the maps are still out there, and they're challenging because you see a blue line and this side, you're in or you're out. So that is in this great big pie that's the NFIP, we have been able to address the insurance part of it now. We now need the other parts being, there's a stool. If you do any type of FEMA training, you'll always see the stool, but there's the mapping, there's the insurance, then there's the regulations. So we are now working on improving the regulations, looking at how to bring them up. Not much has changed since the 70s when the program was in its inception. So we've updated insurance. Now we need to update the regulations, and we need to also update the maps. Will the maps in the future look more of a graduated risk, like a shaded map to kind of show you different levels of zones? It's in discussion because they are going to have to take that step to share that risk away from this very binary map they have right now.
Okay.
But it is still in process. I haven't seen anything concrete on what it's going to be, but it would look more like the graduated risk that you would probably see, the color shading.
All right, so moving away from that, you're either in or you're out. You're either at risk or you're not, is what you're saying.
Oh, and we hear it all the time, guys, like, I'm out. It's like, I get it, but you're not, because I don't know how many times we've been out in the field with disaster assistance. That water never stops at the blue line. And
yeah. So far in this conversation, and I understand why, I'm hearing a lot of acronyms and a lot about disclosure forms and things like that. You're not included in this next question because I already know the answer. Is there anybody to the right of me that has simple, plain language informational brochures that you give to people that says, this is what you need to know about flood risk and how it impacts the decision you're making today?
I can say no. We do have a form, and that was something I've been thinking about. I think that is a great idea to develop that. We have one form with respect to it's HUD puts it out for your protection, get a home inspection. So we have that kind of a nice simple form. Clients are required to sign it to acknowledge that hopefully they read it, and we go over it with them. But yeah, maybe something with respect to flood insurance. I'm not going to say it's not a bad idea. It could very well be a great idea.
Okay. Others? Does anything exist? Have there been conversations at least about something like that?
I mean, our association, IAMB, already has several one-page documents, consumer-friendly documents about all types of insurance. Claire, do we have a flood?
We do.
We have a flood available.
Okay.
So there is a resource available.
All right.
Yeah.
We typically refer them to FEMA's website for information on flood. Whenever we find that out, that's the first place we refer them to.
Okay.
Again, to an insurance agent, yes, but just general information on flood insurance, it's FEMA.
All right. Nima, I'm going to come back to you.
Yeah. Terrence, just to
Yes, please.
tying to your question a little bit on the education piece, would be curious, particularly with Mark, but certainly anyone on the panel, of the brainstorm I had earlier about allocating a certain number of existing training. So I'm not trying to add 2 hours of additional training on top of 24, but if we were to earmark in in each of your kind of required CE training, that maybe 2 hours of them be flood for realtors, for insurance agents. I don't know what the CE is for mortgage bankers, if there is them. Is that something that you think your industry would be receptive to, because we're not expanding the number of hours, we're just clarifying?
I don't see
hours?
why not, Commissioner, because your national association already does it with annuities.
Yeah.
So, I mean, that would be, there's a requirement for annuity certification, so why not flood insurance?
Yeah, and if there's, I would agree with respect to real estate, we have 14 hours every 2 years. Over the last couple of years, we always have a state mandated component to that every 2-year cycle. So we had fair housing, professional standards, things like that. So yeah, flood insurance being one of those periodic things to include, it makes sense.
And if I'm not mistaken, maybe within 10 years, FEMA required one class. I think when bigger waters came
Yeah,
out.
you're gonna require one. And we have a
One
full suite of
requirement
training that's offered
Right.
for agents and adjusters. It's 2 classes and it's offered like every 2 weeks ongoing. So, I mean, there's already that training mechanism there. It may just be pointing more folks to it.
Correct.
Yeah, like you said, if it's not mandatory, you're gonna focus on where your business is, and not, and if you already flood.
Yeah, just a quick footnote. So on pre-licensing courses, it is touched on flood insurance. It's not very aggressive. And on the continuing education side, if people choose to take independently, flood insurance is addressed, but it's usually only addressed in the finance-related courses. So again, it's out there, but the thing I liked about the for your protection, get home inspection, we're not sending them to a website and hope they go look at it. We're actually putting it in front of them and having them sign it, so we know they saw it. So that's the only thing with, I like that concept of, just making sure that they sign it and acknowledge they read it.
And then one unrelated question, Mark. I'm curious if you're seeing more companies and more policyholders implement or accept kind of the water mitigation devices or the warning system, the early warning systems, and kind of the tie to any discounts that you're seeing as part of that process because you're helping mitigate the risk. It's
Right,
one
some
area that,
carriers are,
okay.
but it's mostly tied to the shut off of their internal water supply. So if they have a sprinkler system in the home or just the regular plumbing, if water is escaping that vessel, then insurance companies are crediting, much like an alarm system, a burglar alarm or fire alarm system. Some companies are right now, and some others aren't.
I saw the District of Columbia did a flood report. They had a couple years to do it, so it's pretty comprehensive. But one of their recommendations was to require discounts for those homeowners, policyholders that implement a mitigation or warning system as part of that process, which I think is conceptually interesting to me because theoretically you're catching the risk earlier.
Correct.
In a position where maybe you can do something about it.
Oh, I'm just building on that, maybe even further, if the elevation of.
Tom Hughes with PEMA.
PEMA, sorry. Elevation of utilities, are they getting credit for that? Are they getting credit for venting, the flood vents in their basement? Are they doing, wet or dry floodproofing? In the past, they didn't get much of a discount. We're seeing that on the elevation side now. We're talking about, and we got to call it the NFIP pricing approach. But there used to be a significant discount in the NFIP for doing those mitigation type activities, and so there should be some kind of discount for good behavior. If we're protecting your investment, and so the other thing I had, if we're talking about disclosure too. Is it talked about that if they don't go NFIP, they go private, that they're not going to be eligible should they get hit by a future event for flood mitigation assistance funding? Is that one of the things that are disclosed? The other thing too is, are they aware in their policy too that they have increased cost of compliance? Many times we find that we have to walk them through that process for the homeowner that does have insurance on how they can access that $30,000 to help them to get back in good graces with the code enforcement official. So I just don't know where in the process is any of that.
Right. As far as notification, from the carrier, I don't believe so. On the private market, I don't believe so. It would be up to the agent to disclose those things. And, going back to another thing with the new pricing model with FEMA or Risk Rating 2.0, we did see a lot of the deductible credit or discounts vanish. So where a homeowner could retain more of the risk, take a higher deductible, and have an offsetting premium reduction, now it's almost non-existent. I mean, it's within 1% or 2% instead of 25%. So you're seeing that with the new pricing model.
And apologize for interrupting Terrence, but
You're not
also wanted
interrupting.
to let the members know that we can feel free to interrupt Terrence.
Absolutely. No, I was expecting
Certainly
that.
appreciate your moderation.
No, no,
I think
no,
it's
no.
going great, but I just wanted to let people know that they can feel free to interrupt.
Yeah, and I should have stated that up front, that the task force members are free to, and we'll also have some time for questions and answers here in just a moment, but feel free to ask any questions.
And real quick, I'm going to go too specific on the mitigation, but for the NFIP right now will recognize 3 mitigation measures and discount the premiums. The elevation of the structure, the elevation of the mechanicals and equipment, air compressors, hot water, as long as it's properly elevated. You can't necessarily just put it up on cinder blocks in the basement. You have to move to the next higher floor, which, some people can. If you have a 1-story ranch, that's not very practical, and that as well. And also the installation of proper flood openings. Those discounts were not available before for those activities, so that is new. However, we have definitely seen, under the legacy approach, if you could elevate a home 6-7 feet, you could then tell them that their insurance would be reduced by X amount. In some cases, they can elevate and they see a minimal reduction in their premium, and that just goes back to show that, yes, you're elevated higher above the flood water surface elevation, but there are a number of other factors there that are putting you at risk. So simply elevating is not solving the problem. You're still at risk, maybe a little bit less risk. So but it has made that much murkier in terms of being able to sell the mitigation of in terms of elevating a structure. So I just wanted to add that in.
I'm Steve Sanacero, by the way. I apologize. I serve on the Senate Appropriations Committee. We had our budget hearings this afternoon, so that's why I was late getting here. This is a very important discussion, and I appreciate your moderation of it, particularly for people who are looking to purchase the house. But the issue, a large part of the issue is for people who already own a house and how they afford flood insurance and how they therefore protect themselves against that risk. So along the lines of what you were just talking about with respect to, elevating a house or doing other things that might provide you with some premium relief. And I guess this is really a question for you, Mark. In cases where communities have undertaken steps to help mitigate flooding, whether it's some kind of engineering control, whether it's, any other structural change that might have been made to help alleviate the flooding tendency in particular areas. Is that something that the industry then responds to by way of providing some kind of a discount?
There is. FEMA in their pricing model has what's called the community rating system.
If they're in the program.
If they're in the program.
Okay.
So that could give up to, I believe, 25% on the.
Between 5 to 45, depending on your score. Yeah.
Okay. So, but it's confined basically to the community rating system.
You have to be participating for that.
Okay.
That discount.
So if you have a community that's not participating, then.
Then you can't avail yourself of any kind of help. Okay.
So if I'm in a non-participating community and I put, for instance, vents on my house, I forget what they're called, but the things that.
Flood vents.
Yep, flood vents.
Flood openings, yeah.
Am I getting any sort of reduction in my insurance costs?
So you would, but you'd have to go back and talk to your agent and make sure that, for lack of a better button, is being pressed when they go to renewal, or if they do an endorsement on the policy, that they can, now say, yes, we have proper flood openings in here, or yes, we've properly elevated the
I have to
mechanical.
go back and talk to Mark M, right?
Yeah, it's not gonna just automatically happen because you did it.
Okay.
There has to be someone that goes into the system and.
Right. But that brings me to another point concerning now with the new pricing model, we don't need to obtain an elevation certificate on a property. So a home buyer does not have to invest $750 to $1,000 for a surveyor to come out. So from that standpoint, the new pricing model is good. And that just made me think of that one.
So, David, how much time do we have? Are we good?
Yeah, we're good.
Okay, because I could do this all night. I want to, but I didn't mean to cut you off, but I just wanted to build on your question that you just asked.
Yeah.
So green stormwater infrastructure. So there's two questions, actually. If I had GSI installed around my property, is that going to result in a reduction in my insurance premium? And are you going to tell me if it does or if it would? Are you going to proactively communicate that to me?
FEMA rate, I don't believe it's.
I don't know.
I don't
Yeah,
think
it would not be recognized
Okay.
that in any way that I know.
Okay,
So-
but the vents would.
The vents would, yeah.
Okay.
It's a structural modification to the structure. And that's, when we're talking about an FIP, we're looking at the structure. Any improvements to the land, landscaping, that would not be covered by the insurance policy, so.
Okay.
So it's the best practice, and we recommend it, grading green infrastructure, that's great for peace of mind. It just doesn't have any effect on the premium.
Okay, is there a reason?
Jeez.
I have to ask you.
I think to some extent, we're probably still in the infancy of some of this green infrastructure and the efficacy of it, and it works great initially, but there's an upkeep and maintenance, and what's the long term?
Okay.
So I think it's too new to really see what its place is in terms of being able to say, yes, I can reduce a premium based on it. But I think if you were looking at larger projects, community-wide, watershed-wide, now those are the kind of things that may be able to play a factor or impact those factors that go into the rating variables for the pricing approach.
Yeah.
So over time, they may have an impact.
So let's talk about floodplain management for a second then. 'Cause
Sure.
it sounds like you're getting into that a little bit. So I'm going to ask you, Cheryl, because you're the banker. Yeah. How do floodplain ordinances in a local community affect my chances of getting a mortgage or getting favorable rates? Not at all?
The only thing that we use to determine that is the standard flood hazard
Okay.
form, and that certification, once it comes through, whatever it states, that's what it is.
Okay.
And that's what I would think that the insurance agent company is basing that on.
You're shaking your head,
So,
yes? Okay.
Well, there's two parts. The flood certification, even though they're not rating anymore on where they are in the zone, in order for me, the agent, to get a rate in FEMA's system, I have to put the address of the property, the community number, which is a FEMA assigned number for the community, and then the zone, the flood zone. So that information does come from FEMA's flood map.
Okay, and the flood zone changes based on the floodplain management that's in place there, correct?
Right, and that is driven by the mandatory purchase requirement. So if you put in an A or a V,
Yeah.
mandatory purchase requirement, X, shaded zone X, that's what it's looking at there.
Okay.
Yeah.
But I was going to say that the second part is the elevation certificate gives more detail about the elevation of the home, the flood vents, the square inches, however they determine, the amount of square inches per opening, and also the elevation of any utilities.
That all makes sense. Where I'm going with this is, so far in this discussion, we've been focusing on the individual homeowner or buyer, the individual dwelling. Now I want to take us up to the community level. Do community leaders in Pennsylvania understand that, for instance, by belonging to the community rating system, that there are benefits to individuals living in that community when it comes to flood insurance affordability? What do you think? Why is that? What's going on?
So here's where I can talk about my previous experience as the NFIP coordinator, in that, floodplain management in Pennsylvania is extremely challenging because we have 2,500 municipalities. So every community has its own council, its own floodplain manager, its own building code official. In a lot of cases, they've outsourced it to a third party. I've talked to individuals who are responsible for 130 municipalities in central Pennsylvania. I don't, granted, it's probably limited, but I don't know how much floodplain management and building code is going on if you have 130 municipalities, effectively at least. So I think, yes, we have CRS communities. We have some pretty decent ones that are very active. We have good communities with good floodplain managers that are doing a good job. We have a significant amount of floodplain managers that I will tell you, they don't even know where their ordinance is. They don't even know who their floodplain manager is. And unfortunately, it's a significant amount of them. And that's one of the ones that, that gives me heartache that, that's a challenge. It's more so than this task force, but I think that is something that Pennsylvania needs to look at long term, is that, we've seen it with the regionalization of fire and EMS, floodplain management, code enforcement, those kind of things. If we really want to make these changes, we need to invest in those programs and help build that capacity. Because if we're not doing floodplain management and we're not doing proper code enforcement, then we're allowing people to build in the floodplain and build non-compliantly in the floodplain. And then at the 11th hour, they go and visit these fine folks over here who are doing their jobs, but the die is cast. They're done. But, the elevation certificate, the mandatory purchase requirement, you're trying to say, it's.
I know we have a question here.
Yeah, so it's more of a statement. I think it's less an awareness issue, I can tell you as a former township supervisor, than it is a cost issue in many cases. I think particularly with the storms that we've seen in the last decade, 2 decades or so, a lot of these communities are well aware that they have flood problems. And if they had their druthers, would probably want to be able to deal with them a little bit more effectively. But they don't always have the resources to do that. And that's particularly the case in small towns that just don't have the wherewithal. Representative Warren and I represented our borough, which is a borough of 2,500 people. And it really does not have the wherewithal to do a lot of those types of things. So that's obviously a discussion for this task force over our remaining time. But I think it's more that than it is the awareness. In some cases, there may be a lack of sensitivity to it, perhaps. Yeah. But I think at the end of the day, it's really more of a cost issue than anything.
Appreciate that.
Yeah.
I kind of want to shift away from floodplain management for a second and get back to communication and messaging, because you said something that I wrote down. For your protection, get an inspection. Mm-hmm. Who came up with that for you?
That is actually a form from the, right here, the U.S. Department of Housing and Urban Development. Okay. So it's just, and then we just took that and added a little signature line at the bottom.
Well, here's why I ask, because I used to work for a PR company. So that's very catchy as a tagline. For your protection, get a home inspection. FEMA has anywhere it rains, it can flood. We actually wrote that for you, I think, if I'm not mistaken, many years ago at OLB. So here's the question. How are you, FEMA, getting some of those really catchy, memorable taglines into the hands of these folks so that they can get them into the hands of prospective homeowners?
Yeah, I think that goes back. So we have a pretty extensive engagement team at headquarters that we work closely with, and then we work with our external affairs. They push out a lot of marketing, and that goes back to, I think, historically, that has gone primarily to NFIP offices and emergency management offices, and we need to make sure that those external affairs folks for realtors associations, the departments of insurance, the lenders are also getting that as well, because they create a lot of, we have a lot of campaigns going on, riverine flooding, hurricanes, seasonal awareness, where FEMA's doing all the work. It's creating all the content. It's creating the social media messaging. It's really just a matter of getting it in someone's hands who can then post it on LinkedIn, Facebook, flip the duck, the little yellow duck you've seen around there.
Does FEMA have anything like a flood communication playbook or something that the folks in the industry could have access to that could help them communicate?
I can inquire. I'm sure we do. I'm not sure if it's an internal thing but
Okay. Several years ago, they had what was called Flood Smart initiative. For agents and brokers. So there was something that was like a marketing campaign. You can get marketing co-op dollars, and I believe, but that went away, I think 5 years ago.
Yeah.
So it was there.
Okay. All right. Coming back to perceptions or misperceptions of risk, something occurs to me. So some of this conversation has been based on the assumption that we want people to get flood insurance because they're at risk and they don't understand that risk. We're not communicating the risk. Something's going on. Is there a possibility that some people understand the risk? They're getting the message. They just don't want to pay that, and they don't want to move because they're attached to that place where they grew up, and their parents live, and their grandparents, and all of that. I'm seeing heads immediately nodding. Tell me, so how do we deal with that if that is happening? Cheryl, do you want to go ahead? You nodded first.
I'm thinking of the guy that removed the deck that was in the flood zone.
Yeah.
You know, he's still very close. He could still have damage. They're avoiding the premium by doing that. That it's just affordability or misconception of the risk. They're still right there from here to here, away from the creek that floods. So
yeah,
how do you teach them that? I don't.
That's
know
my
how you teach
question.
them that. It's
because this speaks to
I don't wanna
repetitive
move.
loss
It's
structures,
kind of
doesn't it? Where somebody is flooded, their
Flooded
property is
over,
damaged, and then they rebuild
Yeah,
same
but-
location.
But to build off of that, when I worked for Cedar Council of Governments, it's a local development district, so it's from north of Harrisburg up to Lycoming County and out towards like the Bloomsburg River. Obviously, we had both branches of the Susquehanna, it's pretty significant. And we would have outreach and talk with these communities, and we were trying to sell them, like, you know, join CRS and, you know, all these great benefits. And a lot of them said, look, leave me alone. I grew up on the river. I don't want to be told that I have to move. I don't want to be told I have to evacuate. I remember talking to a gentleman on the Isle of Q, which is that stretch next to Sealands Grove, between Penns Creek and the river. Yeah, he's like, yeah, last time you came in and you forced me out of my house. I've been through 15, 20 floods, and I know what I do. I just turn the tap on outside. I run a hose up to the second floor. I go up there and I wait it out. And as the water recedes, I hose down my house and I go on living my life. Like, this is the risk I know what I need to do to be here, and I don't want anybody telling me. So it is challenging that there's that part of the population. I'm not sure you can really make an inroad. They're there, like that's their blood. They probably know how to deal with it. The big trick is the underserved communities who are stuck there, the renters who have no awareness of what's covered or that they're even in a flood zone because it's never disclosed because they don't own the building, or the new home buyer who is finding out too late in the process. And it's unfortunate because I'm glad to hear that the disclosure has improved, but, you know, I know, and Tom can back me up on this. We've received a number of calls. I mean, I've been with FEMA for a couple of years, but the number of calls with people coming out of closing in tears because they just found out at that point that they had to have flood insurance. They're in the floodplain, and now they're not sure how they're going to afford the mortgage because of the addition of it. It still happens. So we got to. It shouldn't, but it's still.
So Bill, if somebody, let's just say it's not a existing structure, if somebody wants to build a home, right?
Yep.
If they build that home smarter, stronger, they can reduce their insurance premiums.
If they don't build it in the floodplain, they don't have to even worry about it.
Well, sure. Okay. But let's just say it's family property and somebody wants to build it, there it is.
Yeah.
They can do things to lower their insurance premiums, correct? So what can the industry folks do to help communicate that to that individual, that if you do this, and this, it's going to result in a reduction of your insurance?
Can I interject real quick?
Yeah.
This is where floodplain management comes in.
Okay.
Because the first thing they're going to do, ideally, is submit a building permit. And that's where the building permit, the building codes folks, and the floodplain manager have to intervene at that point and say, this is not compliant, this is compliant. And I completely, it's a monetary thing too, but I also know that there are a significant amount of municipalities in Pennsylvania, you know, I'm not to throw you in a bus, that don't do it at all. That floodplain management does not exist at all. And we find those out because they build a house and then they submit a map change amendment to FEMA to try to get out of the floodplain. And once it's on our record, we look and we're like, well, now we have to do something about it. And there's no record, there's no building permits, there's no floodplain manager. It just doesn't. So, it does run the gamut. But I think, I apologize for going off on that tangent, but I think that that's really where its key is. Inception, before it even gets to the need to insure or the lenders for the real estate.
Got it. Tom Hughes?
Yeah, I just want to add one. I think land development too, like, okay, we want to build on this parcel. We want to be right there. I can look over my porch, look out on the creek. Well, my parcel reaches back, so maybe I need to back up from the creek.
Right.
It's all right to issue a permit, but okay, is that probably the best alternative? And I don't know if those discussions are actually happening. The borough or township are still going to get the tax base from the structure there, but why not try to make it, a lot safer than what it would be right next to the creek?
Yeah, to Bill's point, it's absolutely getting that knowledge in the, if the homeowner eventually decides to make a bad decision, well, so be it. But at least they go in with their eyes open. We have a lot of properties, when they change the maps, they now are suddenly in a flood area. And these are like very low income properties, and now they're stuck. They can't afford now to live there. They can't afford to sell it because the value of the property doesn't justify the homeowner's insurance or the flood insurance premium. So there's a lot of people really stuck.
Yes.
And some of them go into foreclosure and the whole 9 yards. So, new construction, that's absolutely the right answer. But the existing problem we have is trying to figure out how to deal with that. And I think that was raised by a couple.
And I would just add, that was the genesis of this entire thing.
Right.
Because that was what we were facing for, 10, 11 years ago, where a lot of these residents, after the flood maps had been changed, were saying, okay, wait a minute, now we can't afford this.
Right.
And to your point, the value wasn't there. And so that's why we have to be thinking about how do we address that issue. I mean, this communication moving forward is good, and making sure that people who purchase properties are well aware of the risks, and they're going to try to mitigate those. But we have to deal with the people who are already there now, and that's the most critical problem.
Yeah. So I know we've been going for an hour and a half, and I want to certainly leave some time for questions. I know some of it, so I'm going to make this sort of my final question. We're going to do a little bit of a thought exercise here, but it should be fun, but take it seriously. If this were Survivor, the TV show, you three were on a team, and you were told that you've got to collaborate to come up with a plan for not reducing costs, but increasing insurance coverage across the state of Pennsylvania. And you've got a certain amount of time to do it before you get voted off the island. I mean, seriously, how would you three collaborate as industry experts to achieve that goal? Just throw out ideas.
I'd go back to the planning. And unfortunately, my degree was in planning. I know he recognized that, that whenever you read my bio, but that's one of the things to me that would make a huge difference was working in floodplain management to make the inroads to the community so that the costs come down.
Got that. That's great. How would you three collaborate to make that happen?
It's education of the consumer and the client or the customer.
All right.
Well, I was going to say, in Downingtown, they've had flood events probably the last 5 years. I think there was 3. And we have a community day. It's called Good Neighbor Day in Downingtown. It's a community event. That's when the whole community comes together. This community's been through flooding 3 times. If you're trying to increase uptake, then there has to be some kind of awareness established there. Either by FEMA, by the state, by our association, by the Realtors Association, just to educate people who are in the Downingtown borough that there is a flood risk in the entire borough.
And is your association involved in that Good Neighbor Day?
No.
Okay. No. Could you be?
We could be.
Yeah.
Sure.
What kind of support would you need?
Well, probably our IAB booth or something. Our pop-up tent, whatever it is.
Okay. All right. What about you, Mark?
No, I think the education part's key, but I think maybe we need to collaborate even more closely than we do. I mean, we do now, but maybe on an earlier point, I need to be making some calls, because we can educate the consumer, but if the consumer says, or they don't, the risk does not register, maybe we need to be a little more proactive and communicate among us. So, maybe do the flood cert early. I don't know what we do, but we need to figure out how to give them, open their eyes. How do we open their eyes? And I think we might have to be more proactive and working with each other more closely earlier on.
Let's forget about the human costs for just a second, which is substantial, the financial costs. For each of you, what's in it for you if this is successful? If flood insurance coverage is increased across the state of Pennsylvania, how do you benefit?
More loans and the income off the loans.
Okay.
More policyholders,
Mhm.
and more income off the policy.
And if we can make it more affordable, clearly we're going to be able to sell more homes.
So at an industry level, the people that you report to, is that front and center in their minds right now, that is the what's in it for them about this issue? Do you think that's recognized and are people mobilizing around that, or no?
I don't think so.
Why not?
Because when it's the flood insurance, it depends on, okay, are you buying a home in Harrisburg where the cost of living, your income is much higher than, say, in my area where it's much lower. Franklin County is very low. So if you have that type of disparity between the different types of properties in this short distance, just up and down the 81 quarter and 50 miles, I don't think that there's an easy answer to that, because you are always going to have low to moderate income individuals and families purchasing properties that are less cost.
Yeah.
And the problem is that they're not looking down the road to the higher expense for them in the long run.
Got it.
And other people can afford it.
Yeah. Okay.
They can't.
Others, thoughts or comments?
I made a note, live in the moment. That's kind of what the clients do. The buyers, home buyers are living in the moment. They're not thinking future risk, future costs. They're really just, how can I get into this house at the least possible cost?
Okay.
Terrence, just one question that I'd be curious, because I think they probably have a similar position, but maybe you're immune to this by now, but what kind of thought process or potential impact happens kind of in your workspace when the NFIP is continuously punted by 5 weeks, 6 weeks, 6 months, instead of extended for a real amount of time? And like, does that actually impact your day-to-day job as you near the extension, which I think we have, 16 more days of NFIP before you theoretically go away?
It was 2 until 3 days.
Yeah, I know. I think we punted you another 2 weeks at the congressional level. But just from business operation, I'm curious what it means for you and for your members and consumers.
How do you have a mortgage in process for 30 days and suddenly NFIP's not covering it? How do you do that? It just interrupts your total business at that point.
So you just have to stop what you're doing for any mortgage that has a flood-related
Right,
component.
and it's not just a homeowner. It could be your business owners, your commercial properties as well. So it's not just a homeowner. These are your small business and your commercial borrowers as well.
Similar impact with you too, I imagine.
Yeah.
Everything potentially stalls.
And I just sent out the email yesterday, by the way.
Urging them to reauthorize for an
And they said,
extended.
thank you, got another week or two.
And I'll just, so FEMA produced an affordability framework and gave it to Congress, I believe, 2017, 2018, where it's a means-tested approach to make flood insurance more affordable. Congress has had that since 2017, and it hasn't been acted on. But we keep having these temporary reauthorizations. So there's ideas out there. We've been operating in a program that was conceptualized in the late 60s, early 70s, and living within that up until last year when we finally completely moved over to the new pricing approach. I mean, that was a revolutionary change in the NFIP to bring it, to modernize it. But we still have, we need that long-term reauthorization. We need the stability beyond weeks, months, a year to then start to really look at these significant changes to modernize the rest of the NFIP.
Okay. Are there other questions? So again, we've gone for about an hour and a half. I know there's some. Yes, please, go ahead.
So for this, back to the CRS, if you're not in the CRS, but you say along like the Delaware River or the Delaware Canal, and obviously there's flood risks along that area, and communities that aren't in the CRS, but they make significant stormwater management upgrades to their community, that none of those changes would reflect in the risk 2.0 rate assessment?
I can't say for sure. Yeah, I'd have to talk with the underwriters and the actuaries in terms of what gets factored in. But yeah, I mean, they do look at watershed level, when they do the rating, the variables. So if there are elements that are improving the overall watershed performance, it could be a possibility. So I don't want to discredit that at all. I just think it's a little bit larger probably then.
And have you seen, and maybe some of the panel of your career of communities in your area, but have you, and then maybe your experiences in other states, or have you seen a better coordinated system with more resources in other states potentially that do have better floodplain management that, are, so many municipalities, Pennsylvania obviously makes it difficult, like you said, but do other states have better resources because of their system isn't so fractured?
I don't want to say it's necessarily better, but when it's more regionalized, I think it's easier to control. And I think we have for lack of a better word, there's a lot of little fiefdoms out there. So, the community where I happen to live is a CRS community, and they are very proactive in floodplain management. However, they're surrounded by a bunch of agricultural communities that are not CRS and could care less. So they're doing lots of things downtown right on the river, but they're inheriting all the water from all the communities where there's no active floodplain management going on at all. And that's the challenge is, just going up the edge and stopping. And that's where I go back to like the regionalizing, are there other entities out there where you could look? I know, PennDOT has regional offices, DEP has regional offices. Could you regionalize the NFIP? Some states have that, They may have a central NFIP coordinator, but they have regional NFIP offices that can then provide those kind of touch points and the advocacy. So they have the time to go work with the communities and go and participate in the community events and do that outreach. And it's also the awareness for the floodplain manager that, hey, somebody's here watching and checking on us, because the other areas we haven't seen, I don't think anybody's probably set foot in 10 years.
Tom, I think you had a comment?
Yeah, I was just going to comment on the stormwater management. Let's flip it around though. I've seen like some communities like Bethlehem Township and Lehigh area that actually have used the NFIP numbers, the saturation rates, to actually be more competitive in the flood mitigation assistance grants to get that stormwater management, their projects done. So, I see one down in, I'm trying to think, Lower Makefield has put one in this year, for project scoping. They're using those numbers that, hey, reward my good behavior and allow me to take some money from the NFIP program to make our community safer.
So, yes, sir, please.
So is there a good system in place that, whether it's the lender or the real estate agent or insurance agent, actually knows that this particular property that we're selling or lending to is in the flood zone?
Well, like I mentioned earlier, when we go to show a house, we have within our MLS, multi-list service system, a button we can click that kind of takes us to the FEMA maps. So we have an idea, at least going in, that it is or is not initially, but we always want to confirm those things. But we do have that resource that we definitely use early on.
That's what you basically utilize as a need.
Initially, yeah. We certainly reach out, if I'm representing a buyer, I'm reaching out to the seller's agent, looking at the disclosure. What did the seller tell me that they know? We do as much as we can from that perspective.
If I could just ask a follow-up to that, but if I click on that button, I go to the flood insurance rate maps, FEMA's maps, I'm going to see.
It's not a rate map, it's just to show are you in the flood.
It's an overlay
So it's
on
not
their
the borough.
MLS, right?
Okay. Am I going to see things like zone AE? Or, okay, what am I going to see if I'm just a regular person who doesn't have any technical background?
Right. Well, first of all, that's not something that the client, unless I print it off, it's not something that the client's going to get. That's what we do.
Got it.
With zone A, all the various numbered letters, and I can't remember exactly all until I look at them. I'm visual, I look at the colors, but yeah, it's got pretty much all of that there.
Okay, but you see it, but you understand the color legend immediately.
Yeah, and I can print that off, and oftentimes I do if they are in a zone. Like I said, I showed one not too long ago, vacant lot, and I showed them just the gradations. I did notice that when I sold, that the insurance agents said that or I don't know if it was the lender insurance agent, but anyway, they said that the flood insurance was required even though it only touched a part of the property that wasn't a building.
Yeah.
Whereas some others remove the deck and as long as the physical structure is not touched by the flood. So
That goes back to
it
the
varies.
comment that, the lender may say, we've looked at the risk, even though you're out.
Right.
Not for us.
Right.
Yeah.
And even though we may say it's okay for you to take the deck off, but we still may require flood insurance because of the risk. Right. Because we know that that stream coming through in a flood, if it rips off the deck, even though it's might be a foot away from the house, it could still damage the house.
Yeah.
Cause significant cost.
Got it. Your investment is at risk.
Right.
Right, as a lender.
Yeah, to Terrence's question of what's in it for you question, Mark Yann, in the insurance industry, you see a lot of advertising for auto and home insurance. Get a lot of direct solicitations or contacts about life and disability. I don't know that I've ever seen an ad for or been contacted about flood insurance. And in fact, I think I would probably have to proactively call an agent, maybe even call more than one to even find someone to talk to about it. And someone found that out as well. This legislation. Are there potential incentives or adjustments to the compensation structure that might encourage the insurance industry and insurance agents to more proactively market flood insurance and thereby take on some lesser risk customers that may reduce the overall cost of flood insurance, or anything that could really make something be in it for you as an industry that may increase coverage?
Well, I mean, basically, the more clients that our agency services, the more income our agency has. So what we try to do as a full-service independent insurance agency is to round out a client's exposures, meaning you're going to write the auto insurance, you're going to do the home insurance, you're going to offer a personal umbrella liability insurance. If the home is subject to flooding, maybe it's paid off, you're still going to offer flood insurance. So just by offering that one policy, there is no financial incentive for insurance companies to give to agents for flood insurance, because FEMA basically writes 5 million policies annually throughout the nation. And the private markets are typically paying commensurate commission on a policy to FEMA. So it's nothing more incentive to go to them. So, but to answer your question, naturally, the more clients I service, the larger the agency income will be, and the more staff we have to add to service that client.
You made an interesting point, though, that I've heard thrown out there, is that instead of asking to add flood insurance, have them actively deny it, offer it at the table. So when they go, say, here are all your insurance options, make them see here's flood insurance, whether it's required or not, here is your premium, here is your risk, educate them there, and then let them make the decision if they don't want to go. If it's mandatory purchase, it's different, but at least lay it all out in front of them, and then you can put it back on the buyer to assume the risk.
And we talked about a waiver before with the realtors. The FEMA has a waiver, which we utilize too.
Yeah.
So.
But they need to be educated on what the real risk is.
Right.
And not just in the flood zones, but in the non-flood zones. And that we've got to get that, because again, they've got this old thinking, 1 in 100 years, even in the floodplain, let alone off the floodplain. So,
Yeah. One of the ad campaigns that FEMA uses, Ogilvy created for them, is 1 inch of water can result in $25,000 in damage. Right. So I think attaching the message to things that people really can relate to is impactful, and something that all the industries could probably benefit from. Other questions from our task force members?
I just have one more about the CRS.
Yeah, sure.
It seems like incentivizing communities, say take a county, you want obviously as many municipalities in that county to be under the CRS. And obviously we can't ask FEMA to create an incentive that if to get that whole county in the program, but maybe as a state, we could incentivize by financing some of that, if a certain percentage of municipalities in the county, or, just trying to think of how to get more on board, basically.
Sure.
Is that something that you guys have thought up to create more regional planning?
Bill, just let me cut before you, because I think that's a great point. And one of the items that we talked about at the first meeting was maybe, as part of our recommendations, creating a resource within the Commonwealth, like at PEMA, that can work directly with communities to, in some cases, help them increase their CRS score, so we can increase the percentage discount for everyone in the community. Because some of them, to the senator's point, just the resources aren't there, even just from a person power perspective. So having a central PEMA resource, or wherever we would put it, may help work directly with the communities to talk to them about what they would need to get to the different CRS levels. And I mean, maybe eventually there's an additional tie to that with like a grant program or something to help afford some of the changes, but some of the communities aren't in CRS and would have to do not a whole lot, wouldn't have to spend a whole lot of money potentially to get into the program.
Yeah, probably not. They may already be doing a lot of it. It just needs to be written down administratively or get credit for it. In the enrollment process, it's an administrative burden, but that's where, through the task force or something, you could look at grant money that could help offset that administrative burden or regionalize it. That's something we tried to do when I was at CEDACOG, was, just go into a community that was interested and say, look, we'll take on the administrative burden and we'll work closely with you. You get to be in CRS, we'll do the work. It was, mixed success, but, I got to try.
Did you have examples of a dollar figure of what it has taken municipalities to get in, just a range of what that would typically cost?
It would vary. So we used to have what was called a what-if statement that would show a community based on all of your policies and coverage right now and premiums. If you come in at these different classes, this is what you would see in the average saving per premium, if it's 5%, 10%. That still exists, but it is being updated to reflect the new pricing approach. So, but that's something that we can look at, we talk to those communities. But, in one case, one of the communities I worked with, they just said, we have a code official who spends a quarter of their time on CRS. So they took his salary, they did a quarter of it, and they said, that's what it's worth. And that was that was the contract. They took a quarter of his salary and did it for him.
All right, if there are no other questions from the board, Mr. Chairman, thank you.
Yeah, Terrence, thank you for helping us organize and moderate the panel. I thought it was a really helpful discussion today.
Good, and thank you.
Appreciate you joining us and all the panelists for coming out and sharing your perspective.
Thank you. Pleasure so much.
So I think just by way of kind of next steps, I wanted Dave to talk about kind of the planning as of right now for Yardley, which I think would be the next meeting in April. So if Dave, you could talk about some of the logistics that we're looking into.
Sure. Our next meeting will be on April 3rd in the Yardley area. We do have a location. We'll be getting out to everybody soon. Thank you so much for all the great work of your folks. We hope to organize a tour of the area to look at some of the mitigation efforts that have taken place and just look at the area and see some of the things that have occurred. We also want to, in the meeting itself, discuss some of those community hurdles and different programs, whether insurance mitigation or otherwise, that are used within Pennsylvania or other states around us. So we're working on our guest speaker list. We hope to have that up pretty soon, but real excited about taking a tour out the Yardley.
Yeah, sounds good. We'll be happy to host Perry and I, and the fact that the location is only a mile away from my house played no role in choosing it. But no, we're looking forward to that discussion. So
Thank you. And just by continuing to wrap up, as my team continues to aggregate like themes and topics that we've talked to, I've been trying to take notes today. So if anyone wanted to add any additional themes that we should be capturing as we start to think about the report. I caught discussion, obviously, of of training and CE requirements that we could talk about. The sample flood forms are a single form that can go out and be used in a number of different capacities. Credit and discount opportunities for insurance mitigation activities, and certainly the CRS discussion again, but also how we help the people that are already in areas that have been redesignated since they've been living in that situation. Is there any other kind of issues that you want to put in the parking lot for now? Yeah.
I think it's important to understand the consumer's perspective. When we're talking about, disclosures and what the realtors do and what the lenders do, I think it's important to understand the consumer's perspective and understand actually what would sink into the consumer during those times. Because as Mark Kay said, consumers are in a tunnel vision mode. And I just want to make sure we're not focusing in one area that's not going to have any type of an impact.
Any other thoughts?
Early requests with the flood zone certification in the purchase process, whether it be at the time of listing or at some point early on, so it's identified.
I think that includes the pricing. The pricing, like how much it would
Yeah, right. Okay. Any other business? No?
Yeah, External Affairs just sent me this came from the governor's office. It's kind of like why we're here. I got this from a 70-year-old woman, has lived in the same place for 50 years. Last major flooding event that she had in the past was in 1980, where they had flooding that affected her property and took out a bridge and left debris. They fixed all that, but in the last 5 years, she's actually had flooding three times. And she also said though that her flood insurance has gone up, has tripled since she actually purchased flood insurance in the beginning. So, those are the kind of folks that we're trying to help here. And I just wanted to share that with the group.
Way to bring it down. And my comms team just let me know, we may not have a month, but March 18th through the 22nd is Flood Insurance Week or Flood Preparation Week, Flood Awareness Week in Pennsylvania. So for those like Mark M. that we're talking about raising awareness, we do have a week and it's coming up soon. So certainly we'll put something out around that time. But seeing no other business, we will go ahead and adjourn and look forward to seeing you all soon. So thank you all.
Okay.